Hey guys, so if you've been watching any of my videos, then you're well aware that the problem that we have in the real estate market right now is the lack of supply. That's what's driving prices up. That's what's making it so hard for people to justify leaving the place that they're at. The other obvious problem we have right now are interest rates. But let me set that aside for a second, okay? Because we just got the September numbers and I want to read them to you briefly. So, listings added during the month of September were down 10% as compared to August and down 19% when compared to September of 2022. So, down, supply down. List price, however, during the month of September was up 5% compared to August. So, compared to last month, a 5% jump. That's a big 1 month jump, and 10% higher when compared to September of 2022. So prices going up. Again, why do prices go up? Because there's more demand than there is supply. Interest rates aside, that has remained true. How do we get to a situation where prices start to level off or even come down a little bit? Well, it's by increasing the supply of homes for sale. Only two ways to do that, really. One is build them, and two is resell. People that are moving from one home to the next. Well, resale right now is pretty constrained. It's locked up by the interest rates of the people that are sitting on 3% or less and don't have the motivation to move to that new house. So the house that they would otherwise sell is not on the market. New construction, however, has kind of been our saving grace to some extent because it makes up almost 50% of the homes for sale here in our local market. The problem is with the overall sentiment of the economy and the cost of money right now, builder confidence has actually come down, which means less homes being started than maybe last month or the month before. But even at those numbers, we're not building nearly enough. What does that mean for the near term future of real estate? Well, quite simply, it means more of the same. Prices continue to rise, and interest rates, the Fed is talking about higher for longer policy. There's a lot of people that think that they're going to hike rates again before the end of the year. I personally hold that belief. And so we're not going to see rates start to come down until mid to late next year at the earliest, most likely. That's going to send prices even higher because all of the people that were waiting to buy because of the interest rates are now going to enter the market as buyers. And yes, some of those people will have homes to sell, which will create inventory. But when they enter the market as both a seller and a buyer, they nullify themselves as, in the scales of supply and demand because they're adding one to both sides of the scale. And so prices will continue to rise and rise at probably a much higher rate because by then the transaction volume will be higher and the velocity of the transactions will be higher. So, look, I don't want to sound like a broken record, but at the risk of doing so, if you want to own real estate and you want your family to own real estate over the next 10 to 20 to 30 years, or even from a generational aspect, and you don't currently own real estate, it's time to pull out all the stops and figure out how to be a buyer in this market because it's not going to get easier. It's not going to get cheaper. And if you lack the means today and tomorrow the market's more expensive, but you're waiting for tomorrow, what's going to change? It's not the market. So if you need to figure out a way to fix your credit, fix your credit. If you need to figure out a way to make more money, make more money. In today's world, really, you can make money in so many different ways. We live in the age of the gig economy. I know people that are making money on social media and things like that. There are other ways to make money. So figure out a way to step outside the box and create an additional income stream for your family. Because if you don't figure out a way to get into this market as a buyer and as an owner, I seriously believe that you will get left behind possibly forever. We are on the precipice of a massive expansion in the wealth gap right now between the super wealthy and the poor. Biggest delineators between those two groups as we erode what used to be the middle class is the ownership of real estate. I think when we are 10 to 20 years down the road and we look back on this time, this is going to be a pivotal 5 years from 2020 to 2025, where really those two fields were separated at a greater rate than ever before in history, and it's going to be around real estate ownership. I want to tell you a quick story of a client of ours, and this is not a unique story. This is a very general story. In 2020, 2019, 2018, 2017, I can look back all the way to about 2015 is when I first heard consumers in the market saying prices are in a bubble, they're going to come down, I'm going to wait. And if you look at the home price trajectory from 2015 through today, it only goes in one direction. So those folks that have been waiting for a better time, trying to time the market, they missed out big time. On the flip side of that coin, another client decided to be a buyer in the market, got into a multiple offer situation where there was more than one offer on a house and had to pay 25,000 over asking price and was really concerned that they were overpaying for the house. And that same house today is worth double what it was when they bought it. So are they glad they made that decision? Absolutely. And now, because they made that decision, that person can now be a buyer for a better, bigger home if they want to be, because they've got the equity that they've built merely by being a homeowner. The other buyer that I mentioned that didn't buy, that decided to wait, they don't have an asset that's appreciated by hundreds of thousands of dollars over the course of 7 years. They don't have a house. So now they don't have that money that they would have otherwise had to roll into the next house. And homes are more expensive, rates are more expensive than they were before. If you try to time the market, you'll fail every time. Sometimes you might get lucky, but it's a fool's errand. Take the long-term approach. And what we can say for sure is that in the long term, real estate is never going to go down. It's only going to go up. And appreciation is a real thing. And when you can have an asset that you live in, that you use, and insulates you from the appreciation in the market because you're getting to capture a share of that, you are now protecting your entire family tree by the ability to be a generational real estate owner. If you're not in that camp, I implore you to get in that camp by any means necessary as soon as possible, because it's not going to get easier. There's my soapbox, and I've been saying this for months, but I'm going to continue to say it because it's important. And I think that, as a real estate professional, it's my job to teach people and tell people how real estate ownership is going to impact their future. There's an article from realtor.com, the last thing I'll say, from June that I have in front of me. And in the article, they make some predictions, 2 predictions to be exact. One is around interest rates, and the other one is around home prices. This is June, so just a few months ago. They predicted by the end of the year, real estate prices would be down 0.6% across the country, okay? According to the Case-Shiller Home Price Index, since February of this year, they have only gone up. Prices have only gone up. The other prediction they made was around interest rates. They predicted that year-end interest rates would be 6.1%. Rates today are about 7.75%. If the Fed hikes interest rates, the federal fund rate, one more time, which again, I think they will, but even if they don't, they've already said they're just going to remain higher for longer, mortgage rates aren't coming down by the end of the year to 6.1%. So why do I say this? Well, you have to imagine an organization like Realtor.com employs some sharp people and people whose job it is to analyze things like this and make those public predictions, and they got it completely wrong. If they can't time the market, then why do you think that you can time the market? I can't time the market, and I'll be the first one to tell you that. But what I can say is, here's a smart move for the long-term outlook with all the different factors at play, and it's a move that, like my second buyer in 2015, might feel a little uncomfortable at the time, but when you look back on it, you're going to be glad that you did. If you want to have a conversation with me about how to do that, please do reach out. But do yourself a favor, figure out how to own more real estate in this country, because it'll be the decision that defines your family tree and your wealth building journey for the next several decades. Thanks.